Hi everyone, we're still in our multiple choice questions for Philippine standards on quality management, including of course PSQM1, PSQM2, as well as PSA 220. Previously, we have given the answers to the first 25 questions, and now we'll continue with questions 26 to 50. Starting with, before accepting an audit engagement, a successor auditor should make specific inquiries of the predecessor auditor regarding, and I think we're quite familiar with this as well, where we said that we have to initiate, as a successor auditor, you have to initiate contact with the predecessor auditor and ask, if permitted, okay, to have this communication with the predecessor auditor. Ask the RID or RID. So that's reasons for the change, the integrity of management, or matters that will bear on the integrity of management, any disagreements, and then to that we add matters communicated to TCWG. So in this case, our RID would include, of course, disagreements that the predecessor had with the client concerning auditing procedures and accounting principles. Let's go to some definition of terms. What do you call professionals other than partners, including any experts that the firm employs? This is what we call a staff. So most definitely, a partner is not considered as a staff, right? So referring to these professionals except the partners, this is what we call staff. So the criteria for determining whether an engagement quality control review should be performed include the following, and actually the answer to this is all of the choices. Whether an engagement quality review is necessary will be determined on the basis on whether laws and regulations require it. It will also be determined on the basis of the nature of the engagement and the extent of involvement of the public interest. That is why we're saying this is required for audits of listed entities. And if there are unusual circumstances or risks in an engagement or class of engagements, then the firm may also voluntarily submit these engagements to an engagement quality review. So the answer to this is delta, all of these. Next, the engagement partner should be satisfied that appropriate procedures regarding the acceptance and continuance of client relationships and specific audit engagements have been followed, and that conclusions reached in this regard are appropriate and have been documented. Acceptance and continuance of client relationships and specific audit engagements include considering, number one, the integrity of the principal owners, key management, and TCWG of the entity. And to this we say yes. Number two, whether the engagement team is competent to perform the engagement and has the necessary time and resources. And to this, we also say yes. Number three, whether the firm and the engagement team can comply with the ethical requirements. And of course, this is also a yes. This question actually brings us back to our previous discussion on preliminary engagement activities on the decision whether to accept or continue a client. So the main source of those requirements are actually rooted on our quality management standards. So the answer to this is Charlie. Next, ASC engagement standards as defined in the preface to the Philippine Standards on Quality Control, Auditing Assurance, and Related Services and relevant ethical requirements, which ordinarily comprise Parts A and B of the IFAC Code and the relevant national requirements. We're referring to the engagement standards. These are referred to as professional standards. So that should be alpha. Regarding the assignment of engagement teams, which of the following statements is incorrect? So let's go through and evaluate each of the four statements. Letter A, policies and procedures include systems to monitor the workload and availability of engagement partners so as to enable these individuals to have sufficient time to adequately discharge their responsibilities. And of course, that statement is correct. Letter B, the firm should also assign appropriate staff with the necessary capabilities, competence, and time to perform engagements in accordance with professional standards and regulatory and legal requirements, and to enable the firm or engagement partners to issue reports that are appropriate in the circumstances. And I think you would agree with me as well that letter B is a correct statement. Letter C, the firm should assign responsibility for each engagement to the senior manager. And actually, letter C is the incorrect statement because the responsibility for the engagement is assigned to the engagement partner, not the senior manager. So Charlie is the incorrect statement. Needless to say, but we're saying it nonetheless, that letter D is a correct statement. The identity and role of the engagement partner should be communicated to the key members of client management and those charged with governance. Taking note that this is simply an a communication of who the engagement partner is. Sound controls would indicate that the appointment should be made. The appointment, of course, is made by the client management and TCWG, right? But the appointment should be on an audit firm basis, not on a specific partner. So they normally appoint a firm, and once they have appointed a firm to be their auditor, then the firm will communicate to them who is the engagement partner. Okay, so Charlie for this number. Next, referring to ISA 220, which states in part that for audits of financial statements of listed entities, the engagement partner should not issue the auditor's report until the completion of the engagement quality control review. So we know this one. In the case of an audit of listed entities, there needs to be an EQR or EQCR, and they cannot issue the audit report until the EQCR is completed. So this is Bravo. Now, this one is also something we have previously talked about with regards to the requirement for the completion of the assembly of the final engagement files. We talked about this one when we discussed audit evidence and working papers. And back then, we said it should be not more than 60 days from the date of the auditor's report. So that is alpha. What do we call the partner or other person in the firm who is responsible for the engagement? What do you call the partner that is responsible for the engagement and its performance, and for the report that is issued on behalf of the firm, and who is required and who, where required, has the appropriate authority for professional, legal, or regulatory body? This is our engagement partner, because we're talking about the partner responsible for the engagement. He's the one who will sign the audit report on behalf of the audit firm. So this is Charlie. What do you call an entity whose shares, stock, or debt are quoted or listed in a recognized stock exchange or are marketed under the regulations of a recognized stock exchange or other equivalent body? This is, of course, what we call a listed entity. Now, you may get to wonder, what is the difference between a listed entity and a public sector entity? Now, we know listed entities to be those private companies whose shares are listed in the stock exchange, for example. Public sector entities, on the other hand, include those entities that provide public goods, for example, or governmental services. Or maybe think about those entities that provide essential public services. Think, for example, about education, healthcare, transportation, utilities, those in the banking industry. So generally, they are considered to be public sector entities, right? So different from listed entities. Now, actions and messages that encourage a culture of quality are communicated through this one. We're talking about a tone at the top, or leadership of the firm, or now currently called leadership and governance. How are they communicated? Through letter A, partners and staff appraisal procedures, letter B, training, seminars, meeting, formal and informal dialogue, mission statements, and letter C, newsletters and briefing memoranda, internal documentation, and training materials. And of course, the answer to this is letter D. So you can use all of these modes of communication to ensure that the culture of quality is communicated throughout the entire firm. Next, where internal technical and training resources are unavailable, and previously we were able to encounter a problem that uses the same concept. When internal technical and training resources are unavailable, then the firm may use a suitably qualified external person for that purpose. Okay, this is also would refer to, for example, the case of external consultants, for example, or in the case of quality control reviews, of course, the presence of a suitably qualified external person to perform the quality control reviews is also acceptable. So the answer to this is delta. Next question. The implementation of quality control procedures that are applicable to the individual audit engagement is the responsibility of the, and if you have paid our audit snapshot on quality management a visit, then you would know that while the engagement partner is responsible for the overall quality of the engagement, the implementation is actually the responsibility of the engagement team. So this should be delta. Next, the firm shall obtain written confirmations of compliance with its policies and procedures and independence by all firm personnel required to be independent by relevant ethical requirements at least, and we call this one the annual declaration of independence. So this should be at least once every year. So bravo for this number. What do you call partners and staff? They form part of personnel. So while partners cannot be called staff, but together with the staff, collectively they are called personnel. Which of the following best describes the word personnel in the context of PSQC1? Of course, we have just mentioned this will refer to partners and staff. So that's alpha. Now, this one is quite interesting because we're talking about a public sector auditor. So, again, we recall public sectors, those which are essential, essential services like education, healthcare, banking, for example. So, a public sector auditor's mandate may include a provision that does not permit withdrawal from an engagement that involves a public sector entity. So, in such a case, the public sector auditor, upon identifying significant threats to independence that could not be reduced to an acceptably low level, should. Now, we know that the rule of thumb for this is that if the auditor is not independent and is not allowed to withdraw from the engagement, the auditor will give a disclaimer of an opinion. But there is a special consideration to be made for public sector auditors. So in the case of public sector auditor who has encountered violations to independence or threats to independence and still is not allowed to withdraw, the public sector auditor should disclose through a public report circumstances that have arisen that would, if they were in a private sector, lead the auditor to withdraw. Again, emphasis on the fact that we are not talking about just any ordinary audit here. We're talking about a public sector auditor. Okay, so that's why this public sector auditor should disclose through the public report the circumstances that would have led him or her to withdraw. So the answer to this is Charlie. Next, the firm shall establish quality objectives that address obtaining, generating, or using information regarding the system of quality management. So we're talking about obtaining, generating, using information, okay, and communicating information within the firm and to external parties on a timely basis to enable the design, implementation, and operation of the system of quality management. So this is one of the newer components of quality control, and this is of course referring to information and communication. However, just like what we mentioned in our previous snapshot, the component of information and communication is actually already one of the components of a system of internal controls. So now we get to see it as one of the components of a system of quality control. Okay, so quality management. So the answer here is alpha. An individual outside the firm with the capabilities and competence to act as an engagement partner, for example, of a partner of another firm or an employee with appropriate experience of either a professional accountancy body whose members may perform audits and reviews of historical financial information or other assurance or related services engagements, or of an organization that provides relevant quality control services. So, what do you call this individual outside the firm? This is what we refer to as your suitably qualified external person. So, that's delta. Personal issues that must be addressed by the system of quality control include the following except. So we're actually looking for the exception. This is in relation to the quality control component of resources, particularly human resources. So which is not included in the issues that must be addressed. Letter A, compensation and estimation of personal needs. Letter B, capabilities and competence. And I hope every time we read out these choices, you get to like evaluate if yeah, are these HR concerns, are these issues that must be covered by quality control policies. And I would say for letter A, that is yes. Letter B, a yes. Recruitment and performance evaluation, definitely. Career development and promotion, that is also a yes. So all of the answers must be addressed. There is no exception. Okay, so the answer to this is letter E. All of the above answers must be addressed by the system of quality control, or in the case that we're having now, in the system of quality management. Okay, now we talk about review responsibilities. Review responsibilities are determined on the basis that, of course, the work of blank experienced team members review the work of blank experienced team members. So it should be that more experienced team members review the work of less experienced team members. It's the ideal setup. Now, if we couldn't find more experienced team members, then at least of equal competence, that would do. Okay, but never that a less experienced will review the work of a more experienced. It's always more experienced would review the work of a less experienced or at least of equal competence. So, Charlie, what is the primary purpose of establishing quality control policies and procedures for deciding whether to accept a new client? Why do we need to have controls over acceptance of a new client? Well, at the end of the day, it's to ensure or at least minimize the possibility that we will be associated with clients, that lack integrity, because that is going to be rather that is going to have an impact on the risk associated with that engagement. So the primary purpose why we have controls over acceptance or continuance is to minimize the likelihood of association with clients who lack integrity. So that would be alpha. Next, the audit work performed by each assistant should be reviewed by a personnel of at least equal competence, but much better if more, but at least equal competence, to determine whether it was adequately performed and to evaluate whether so we're talking about the audit work performed by each assistant. Okay, so we evaluate whether the letter A firm system of quality control have been maintained at a high level. But take note that we are talking about the audit work of an assistant. Okay, so you're referring to the audit team this time. You're referring to a junior associate, for example. Okay, so not letter A. Letter A is too macro level for that. It's already talking about the firm level. Letter B, audit procedures performed or approved in the professional standards. But if you would recall, our standards actually do not prescribe audit procedures. So you can't find the approval in the professional standards. So not letter B. Work performed and results obtained have been adequately documented. So letter C has a chance of being the correct answer. Let's evaluate letter D. Auditing procedures are in accordance with our PSAs. And again, our PSAs do not prescribe audit procedures. Okay, so therefore the correct answer to this one is letter C. Next, the firm shall identify and assess quality risks to provide a basis for the design and implementation of responses. Identify the quality control component referred. So it talks about how the firm shall identify and assess quality risks. It kind of reminds you of how when we perform an audit, we identify, we evaluate, and we respond to the risks, okay, that we have identified. So this one is most definitely referring to the firm's risk assessment process. This time, it's already something that is going to be applied by the firm on the firm, not by the audit team on the client, okay, or on the engagement. That becomes the risk-based audit approach. But this time, when the firm itself performs, identifies, evaluates, and assesses their quality risks, then that is called the firm's risk assessment process. So, bravo. What you call all personnel performing an engagement, excluding experts contracted by the firm in connection with that engagement, they are what we call as the engagement team. Meaning to say, when we talk about the engagement team, the expert is not part of the engagement team. Okay, so after all, they are experts. Okay, so therefore, the answer to this is Charlie. They're not involved, okay, technically in the audit process. And that's about it. That's our complete 50 questions. So for this segment, we have answered 26 to 50. Previously, we had 1 to 25. We have completed our 50 multiple choice questions for the quality management standards. So I hope you were able to more or less brush up on these concepts. Thank you so much for staying tuned and for looking at the answers or staying with me for the answers. What is wrong? Why am I mumbling? So staying with me to know what are the answers to these 50 questions. So thanks and bye for now.